Hello guys, and glad to have you on board again today. Quite a lot to unpack, so let's not waste our time into endless introductory statements. But yesterday has been pretty much an uninteresting session, waiting all day long to get interesting signals. In terms of global tradable context, what's at play during the week is exactly what I prepared you for throughout the weekend, so the weekend podcast is totally due at the current time. We're expecting the market to shift either rationally high or harshly violently to the downside because we do wade into dangerous waters right now in which we're waiting for either some more stimulus coming from the government. Right now, we're expecting the second paycheck, as the end of the previous one has been reached out to at the early stages of August. So as we're into this thing, basically, U.S. citizens no longer have the $600 they get each and every week. So they're basically going to need something intermediate, not as strong as it is. So the big question right now is how much is it going to be, or actually how lesser than what they had previously is it going to be, so that we can eventually forecast how consumption is going to be impacted in the US. You know that the US economy is 70% consumption linked. So the problem is, if we do see that the numbers are less than we expect, and therefore we expect that we get a narrow or a contraction into consumptions from US citizens, and specifically the cheapest one of those, because the richest one doesn't nearly care and give a shit about the US government plans, of course. So it's all about the lower curves in terms of revenues and how much are they going to get, how much are they going to be able to spend. This is all about it. And in the same time, the same big problems we've talked about, the fact that the Apples, Amazons, Microsoft are going in their final waves to the upside. So this is not 100% sure, but my experience taught me that we're living into very dangerous territories for these things, and I tend to believe they are actually about to reverse. No spoiler alert, I just sold Apple yesterday. Very tiny amounts. I think I sold something like 4 shares, so it's really negligible at that point. But I'm stepping in and just tasting temperature over the next 48 hours and see. And of course, I'll be willing to reinforce violently if necessary. But right now it's just speculative trading entry, so I'm not going to go all over this. And once again, if you think I'm inviting or inciting you in any way into trading those fucking assets, just have a look at this weekly podcast once again. Absolutely necessary that you get to understand this perspective. If you go down this road, you're really going to have pain trades down the road, okay? So don't go there. Anyway, let's get straight to our context analysis. All right, so just like we said, most of the comments right now and what's driving the markets and stuff like that is all about the future stimulus package. How are we going to get it? Democrats and Republicans are actually right now fighting all about it. There are definitely a lot at play in here, so it's totally normal that we get a little bit of a confusion type of talking in between. Trump doing everything he can to be reelected as always, and in the same time the Democratic candidates showing that if they actually end up being elected, will get to inherit the bullshit fucking market that Trump gave them. So they pretty much would like to see a market crashing prior than the election so they can actually try to save things up when they actually turn out to be in office. So there is definitely a game in here at play, because obviously outcomes are major for this election, and Trump would like to sustain the market to as high as possible levels so that when the Democrats shows up, they actually crash down the market. That would be its stupid narrative, but that's actually what it's trying to sell to people. If you get the Democratic Party at play, they will crash down the market, and of course it would do anything it can to make that happen. Obviously, what would be the worst case scenario for him is a stock market consolidating or harshly and violently losing the gains, as is still president, and therefore it wouldn't be able to sell its stupid narrative, which is once again total bullshit. Let's cut the crap. But I mean, people are believing what the motherfucker says, so I mean, that's what it is. As long as the narrative is plausible, then some people will be stupid enough to buy it. So that's what the thing is all about. Today, absolutely no catalyst in the economy calendar, so it's all about technicals, and that's pretty great. So, fear and greed index, we are shifting sentiment, but still not making new highs over the previous slightly higher high point we've made. I'm still believing that we're topping off in sentiment in here. Obviously, market is going to new high territories on a daily basis, so we can see a shift from the sentiment. Market prices have anticipated and made new high points, and in the the same times, we can see that sentiment isn't. Kind of a divergence pattern going on in here. Same thing happens with the momentum. So all of the momentum indicators, sentiment indicators showing quite some divergences with the new market tops we're creating, leading me to believe this is truly about a final excessive structure. That's what we been working on yesterday with the experienced traders in the Discord, and that's exactly what I think is about to validate today. That's going to be the topic. Yesterday's sessions, pretty high gap to the upside and a doji candle follow through. This has been pushed by early gains in the European session. Big question today is that as European session is still sitting below major resistances, are they going to be selling today, which I think is the most probable choice. So have we made a final excess on the US sessions? I think we did. Are we going to get an abandoned baby today, which is a structure in which we gap up, range, and gap down the day right after to create an isolated candle on top of the resistance? This is getting very probable as we speak. It's still not 100% sure, but I'm totally monitoring the structure. If that happens, god damn it, I'm going to be selling much harder than what I do right now. But it is still way too early to consider that a one battle. So don't go down this road. We need a lot of patience at that point. Regarding indices, that's what the problem is. All right, we've retraced to the early resistance, the one we broke a few days ago. And you can see that earlier today, Nikkei is below resistance, DAX is as well, EUROSTOXX is also, and we're questioning whether or not we're going to sell those. I personally think they're totally they're totally something that need to be sold. Just like I think US is totally overextended right now. Like I said, I think the apples and stuff like that are on the verge to crash. Though I got in. It's been a few months since I just been monitoring Apple without trading it. Now I'm back in the motherfucking game. I'm selling this motherfucker Apple. So we'll see if that works. Like I said, I'm really dipping a toe right now. It's not going all in. Definitely not. Regarding the VIX, still dealing with the supportive area. We're questioning whether the fuck or not we're going to actually break through this support, or if this was just a stupid trap for whoever was stupid enough to sell this support. And actually we're going to violently rebound and fuck the resistant trend line. I got them to have no answer to this question, as I am totally assessing the fact that we do have upper shadow candles signaling that we definitely want to break the support, but I'm also monitoring the fact that we don't. And as long as we do not, it just takes one day to fuck it all up. And let me be clear, one of those days can be like the early levels of June. Totally fucking it up in a single straight day and making explosive volatility. That's what the type of market I'm expecting within the next few days. So brace your fucking selves, okay? If shit happens, you've been prepared for it. So don't be among the stupid guys who are going to cry out for, oh man, what the fuck is happening? Why the market is going out of control? The market may go out of control because once again, we've bullshitted for months. And if we have to pay that in a single day, that would be totally appropriately normal. So even if volatility goes out of control, don't try to make it rational. It will probably be irrational just because the previous months have been all about being totally irrational. Okay, so I'm totally monitoring the 30-year bonds now and very actively because I think that could give us the early signal that the market is totally going wrecked. And if that's what happens, the early breakout of the resistance we tried or attempted to do a few days ago, as you can see over the previously third candle, we tried, and have a look at the fucking structure. That is an evening star pattern, not the fanciest type of things when you like to break a resistance. Yesterday has been very dangerous over the 30 years. If we confirm that today by going back to supports and breaking them, shit is down the corner. That's the reason why I'm really cautious right now with selling activity, but I'm definitely on there. And finally, dollar, but nothing to say. These are weekly analysis, so therefore they're starting over yesterday. So what you see in here is just yesterday's move. Totally on an equilibrium state right now, not necessarily really important on the beginning of the week. So that's all about it for dollar. Let's switch immediately to our charts because there is a lot to unpack out there. All right, so in terms of correlation analysis, first things we're going to notice, all right, our crocodile mouths out getting expanded, which means we're going decorrelation, totally once again the same possible structure in which we reach out for final excesses before actually terminating the goddamn structure and reversing everyone in the same fucking time. That is the big question I'm trying to answer today. We'll see all about it. It's still speculative at that point. Let's switch to our graphs of S&P 500, and oh yes, okay, so let's switch right into it. Yesterday has been all about preparing behind closed door with the experienced traders our reversal trades, and it has been hell of a fucking success. All day long yesterday we found out the market tops pretty properly, but we also assessed that the early price reaction wasn't favorable for us, that actually we just were lateralized and that the market simply didn't want to do any fucking thing. But we also said that the next level, 32.98, would definitely be freaking interesting. So I personally had an order over there, slightly below of course, so 32.97.27, and I've got the perfecto. So it has been quite a fucking while since I managed to get those trades, but I'm definitely on board right now with an absolute perfect price entry. Yesterday was few attempts. I took the profit earlier today when I woke up at 8 a.m. my local time frame, EST +2 or whatever, I don't know, GMT +1 eventually. So that's the thing, all right? Took early tiny profits this morning. Now I've got the perfecto because of the order that I've been triggered. I'm totally confident in the fact that this trade will validate, which means I'm looking for the trend channel right now. Just I don't know how long is it going to take. Either today is going to be one of those very low volatile day, and we're just going to wait for us and wait for the trend channel to catch up on our prices, and we're going to stick on top of the 23% Fibonacci, which will be a sign that the bullish trend still is at play. Otherwise, we fuck it all up and we rapidly get to break this trend channel, which I tend to believe is the most probable thing. And in that perspective, eventually this is going to be an abandoned baby over the previous resistance. Totally a bullish trap. And that would finally, once and fucking for all, signify the fact that the market is now reversing and not just a tiny bit. And that's the reason why I'm pretty concerned about what's going to be doing Apple today. If Apple falls off a cliff with an abandoned baby on major stock indices, that means blood is down the street, okay? Though in that perspective, the fiscal stimulus, or the let's call it the package from government, has to be absolutely staggering to come up for this, because if the big name starts to fall off a cliff, they're not just going to lose 10%. Like Apple's could lose more than 50% valuation in just a few weeks. And therefore, like I said, you better have to be showing up some strength in terms of fiscal stimulus, which I doubt is going to be possible. So, all right. Once again, don't consider things are settled ever. Nothing is ever 100% guaranteed, just like nothing is never going to happen. Things are always in between. So I don't think I won the battle. I just think I definitely made a score out there. And as I have a perfect price, I'm definitely going to keep it as long as possible. Okay? So first assessment nowadays is, as we dealt with early 15-minute signal yesterday on the intraday session with all the experience, only the experience, I'm sorry, I don't want to share everything, especially for your safety, all right? The levels we were dealing with yesterday was 32.92, so yeah, it was this one actually. So we were monitoring every signal in the nearby area. First one has been a taking profit structure, second one an exit, much better signal. That's the one we shorted altogether and took it on the overnight session, trying to figure out what the fuck we would be dealing with at 8 a.m. earlier this morning. When I woke up, we were totally uninteresting price trading, though I profit took and set my order to the next level, 32.97.75, and it has been the good one. We're now breaking levels. We broke the trend channel, which means this exit is fucking great. Okay, it's not happening on top of the resistant context, but as you can see, as we try to break it in here, we basically have made no gains until then. So breakout, failed to overcome the context the last time, breaking the trend channel. This is a typical motherfucking reverse in here. So I think I got it. Okay. Next step, getting into confirming the reverse and therefore validating the H1 signals. I think we're going to get there today. It's just a matter of time. Like I said, either we save some time and we wait, or we go straight line, which would be an even better case scenario for us. So next area of risk management, this 23% Fibonacci, in which we have a range target. So don't be too bearish today. What I expect for most is a range to build itself. So my only concern today is what's going to be the shape about this range, and can we actually find a third range boundary later on in the shorter time frame eventually. But the best one will be 15 minutes for us to get there, reverse this context, and eventually slightly later today trying to retrace to this resistant context in which everyone will be able to trade. Okay, so if you get me right, you know I'm talking real fast, so let's go to the conclusion so I'll get to explain all of those things. Jesus, motherfucker. This one isn't working. I don't know what the hell is wrong with this thing. Come on, transition. I don't know what the hell's going on. It doesn't work. Sometimes it does, sometimes it doesn't. I'm gonna pause. Jeez. Motherfucker. All right, anyway. Now it's working. So this is all what this thing is about. Yesterday was all about experienced traders catching their reverse trade. I told you to wait for us to tell you that we have probable candidates. Wait for the signals to validate so you can actually try to catch up on the third range boundaries that may follow. So that is what you're going to be doing today. Very aggressive traders will eventually have to go down to 3-minute third range boundary. Don't go below. That would be too dangerous. The intermediate risk taking would be 15-minute context, and it's probably going to trigger today. At least I think it will, or eventually earlier tomorrow, or overnight eventually. But considering it without the next 48 hours, the next 24 hours, if you're a little bit more patient, I suggest later during the week you're probably going to get the same opportunity on the H1 time frame, and this one is the one I would like to get to validate, which means reversing the H1 context, pulling back to it, finding a third range boundary, and if that's possible, that is the trade I would like the community to take altogether, because it's going to be a very, very much educational trade that we're going to manage altogether on a day-to-day basis. This is something that is going to work very hard on your psychology, because it is going to be a fairly long trade. God fucking damn it, fly. Anyway, that being said, I'm going to wish you guys a pleasant day and see you tomorrow.